What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. Sorry for today's video coming out late. If it's your first time here, you might not know that, but I do these videos Monday through Friday, 5 days a week, just to get a good sense of where the market might be headed next. We look at the daily time frame and the 30-minute time frame. Let's go ahead and just get into it. All right, welcome back. We are here on the daily time frame. Today's video is going to be pretty short. Today just so happens to be my birthday, so I woke up with some nice breakfast in bed, drinking a nice beer now, and I played a few video games with the buddies. And then of course my wife and friends posted embarrassing photos of me that I reposted on my Instagram stories. Enough about me, let's go ahead and hop into this video. So what took place today? Well, we had a nice move up and a little bit higher, pressed up to that 3,400 range, which we mentioned in yesterday's video will act as some sort of psychological level of resistance. And just about at that time, the Federal Reserve released the minutes and had elevated concern around needing more stimulus. This is just so happening to come around the time that the unemployment benefits, the extended unemployment benefits of the $600 bonus has came to an end. They now say that they need more help from Congress going forward. The market clearly acted poorly to that, but if you've been watching these videos, we were prepared ahead of time. Now we have been talking about this volume accumulation percentage indicator right here, and we've been noticing it went really high to 60.11, and we started seeing it drop off as the price continued to move higher to basically sideways. Now, this doesn't necessarily mean that the market is now turning and taking a turn for the worst, but it is still heading where the volume is dropping off. And if we start moving into negative territory, similar to what we saw back here in February, we could potentially see the market start to turn as well. The McClellan oscillator as well is now negative. It is now bearish, and that is known as a breadth indicator. So a couple bearish things going, but does that mean that the market's just going to collapse and fall to the floor? No, that's not what it means, but it does seem like a pullback is underway. What makes me think that a pullback's underway? Well, simply put, we're in this rising wedge pattern, which is a very bearish type pattern, and it looks like it's just about to break through. Does that mean that it's going to continue to the downside? No, but what we need to do is make sure we're aware of an area of support that the price can pull down to, and we've been talking about 3,200 as that level. So if we get a breakdown, it would be likely to see something like that take place down at 3,200. Very similar when we saw a big pullback here. This was really the only gigantic, significant at least, pullback in June from basically the end of mid-March. As you can see, we had some really big pullbacks here. We were all aware of those ones going on. And then we had a little couple of them here. I mean, they're decent, somewhat significant right here and right here. But this was really the outstanding one right here that really got people scared again. And it's looking like something might be taking place here in the very near future. Now what I want to do is I want to head over to the VIX chart, the volatility index for the S&P 500, because that has been something that we've been monitoring as well, because last time that we were in a falling wedge pattern in the VIX, it broke out to around 46, and now we're in another falling wedge pattern that is now, I think, peeking its head out to potentially move more to the upside as well. So let's head on to the VIX to see what's new. All right, so we are over here on the VIX chart, and this was the first falling wedge pattern that we drew out, and then we broke above it, and we went as high as 44 on the VIX, and that was where that significant pullback in June was on the S&P 500. Now, what we've been saying is I believe that this gap will probably get filled on the VIX. It's not always certain, but it looks like it might get filled. Came down somewhat pretty close. I mean, I would say from 18.4 to 20, that is very close, but it didn't quite fill. So what we need to do is monitor this closely, because a break above this falling wedge pattern can take us as high as around 44 to 45, this range up here on a full breakout. Now that doesn't necessarily mean it's going to happen, but what I want you to pay close attention to is this little head poking out here, and it did close above the falling wedge pattern. So this is a pretty bad sign for the S&P 500. Are we going to see it continue? Well, When we saw it happen over here on the VIX back in June, we had a couple of days kind of trading around it before the ultimate breakup to the upside. So it'll be interesting to watch. Keep an eye on it because when this thing moves, clearly it moves quick and aggressively. So we're back here at the SPX, the S&P 500 index. And as you can see here, the price is not quite closed below it. It has a little bit of a little bit of a lower wick here. So it's still holding within the pattern. If on the VIX that it decides to fill the gap still, that means it'd head lower on the VIX. It would still send this potentially higher. Now, a couple concerning things that I have already mentioned is that the volume has been dropping off. The McClellan oscillator, the breadth indicator, is taking a breath down into the bearish territory. That doesn't necessarily mean, unload all your stocks, but you might be looking to potentially hedge yourself or put in some tighter stop losses if we start seeing a pullback to the downside. Let's go ahead and hop into the 30-minute time frame to follow up on yesterday's video and kind of get a good sense as to where this market might be headed next. All right, we are here on the 30-minute time frame. This blue vertical line going down the screen right here represents where the day started. And these other lines over here, the red and the green, represent areas of resistance and areas of support that we mapped out yesterday. So what took place today? Well, right out of the gate, we did have a gap up and some confusion in the first 30 minutes, but ultimately we started heading higher for the remaining 2 hours. Now, if you watched yesterday's video, we mentioned, hey, there wasn't that many good trade ideas going on, but the couple that I did mention was actually quite applicable today. So the first one was we get above this area of resistance, it then becomes an area of support. So if it went up and got rejected here, you might have been able to buy in with a stop loss and play a bump to the upside. If you caught that trade, congratulations. It was more of a difficult type trade and it didn't go quite high, but there was clearly, after resistance was broken, it acted as support and moved a little bit higher. And then we had this 30-minute candle here really take a nosedive all the way down to as low as 33.81 and a bounce from that point to a little bit higher, right closing that candle around the 50 period moving average. Now the area of support that we mapped out yesterday was 33.86. And it seemed to hold somewhat around the 50. In that area, we had the bounce up, but then ultimately the last hour of trading, we saw the breakdown. The other trade that we mentioned that we said, it would work, but I don't really know. It didn't stand out too much to me, is if we had a pullback again to this level of support, because I traded this one right here to the upside. It would be another potential area of support, but you had to, hold a tight stop loss per usual. It went a little bit lower than yesterday, but then ultimately it moved up a little bit higher, which you would have made that trade profitable. Now, if you watch me on Instagram, I called out a trade for you as well, and that played out quite nicely. What I'll do is I'll post a clip of it right here, just so if you don't follow me on Instagram, I do post these here on occasion to help you guys look for certain setups. Here is the SPY chart on the 5-minute time frame. I feel like if it breaks through this little lower trend line right there, we'll be hitting that little floor where that pullback was and tested multiple times. Potentially break below it. If it does close below that point, it would be quite a flush to the downside. But we'll see if this trend here holds up or not. But a break below it would take it from 338.40 down about 40 cents to 338 would be the next level. So a 40 cents per share move if it does flush. Look like it just started to flush. It hasn't closed below it yet. Still a minute left for this 5-minute candle, but kind of looks like a failed attempt to bounce right here and now is rolling back over. Boom. Looks like it'll reach it here in a few minutes. Right on time, Mr. Red Candle. Right on time. All right, now what we want to do is go ahead and remove these support and resistances and update the chart for tomorrow's trading day. So right out of the gate, what are we going to do as far as support goes? As far as support goes, I'm going to put it right here at 33.70. That's going to be our level of support that we want to keep an eye on going into tomorrow. Clearly, this acted as support previously. It acted there right here and today. And then in the history of the chart, it acted as support as well. And then these two large days right here, large candles, I should say, acted as resistance. Now what I want to do is I want to zoom out a little bit so you're not quite as scared on the specific pullback. Yes, it can go down lower, but in order to get good context of everything, I want to make sure you're well aware of what's going on longer term context. As you can see, we have the 50 period spread nicely above the 200 period, and both are sloping up. Now the 50 period is kind of getting a little bit flat, and the price, note that it did close below it, which is bearish, and it could represent a potential change in the trend. However, just know that the prices have been putting in lower highs for quite some time now, just like so. Boom, 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 boom. So on these pullbacks, it's not much to worry about until it changes to start making lower highs. So heading into tomorrow, we have 3370 as our level of support. We have 3200 that's on the daily. That's a more major time frame. And now for another area of support, I'm going to go ahead and map out 3360. 3360, if I zoom out in the history of the chart, you can see that it did act as resistance right here. You had a big candle, hit it down over here for support, or at least almost touched it. And then you had a couple tries where the price tried to get down there again. So this 3360 level, you can call it 3360, let's 63 or 65. You can move it up a little bit if you want to be more specific. Like we'll just put it right here for now, just 33, 63, 13. But to make it nice and round, you can call it 3360. It's never exact on the money. Well, I shouldn't say never. It sometimes actually is exact on the money. But supports and resistance can act like webs where it could kind of travel in and out through them. So we have a couple areas of support. Where the heck is our resistance for tomorrow? The first area of resistance is going to remain at 3400. Clearly it acted as resistance today, so we're going to keep it there heading into tomorrow. The next area of resistance, I want to go ahead and place it right here again at 3387. Why do I want it there? Well, simply put, it acted as resistance previously multiple times, right here as well. Then when it broke above yesterday, it acted as support, and then it did act as support through here, but there was just too much downward pressure to keep it up. Now we also obviously have this trend line here. Now that's part of the rising wedge pattern, so you can keep an eye on that if you would like, but these are the levels to monitor in tomorrow's trading session. Now looking at this chart, there is one other area that might be worth taking note of, and it's right here at 3380. And the reason why that might come into play tomorrow also is because it did act as resistance previously on the chart and support, and then resistance 2 times right here as well. So that level 3380, 3387, these are all going to be the levels that I'm watching out for going into tomorrow. Now, I don't see any specific trade plans at this particular point in time because we're still in a very uncertain area around some big news that just came out. So I'm going to go ahead and wake up tomorrow, see if there's anything going on throughout the day. And if something does pop up, I'll just post it on my Instagram stories. But right now, I just don't want to predict anything or try to say anything or lead you the wrong way, unless if I see something that is a really good risk versus reward type of trade. So that is all I have for you on today's video. Hope you guys are having a wonderful day, and I will see you back tomorrow.